We were chatting last week about Shoprite and how their employees were amidst a strike. We weren't quite sure at that stage how things were going to play out. Shoprite has since resumed operations. Has the impact on operations in terms of cost been tallied?
Yeah, Alishia, well, we've got an official estimate of about 10 billion kwacha in sales over the 4-day strike, and that's quite big for a short period.
Quite a knock there in terms of activity on Shoprite's share price on the ZSC. How is that impact translated?
Well, we saw a big trade go through yesterday. It's up 18.75 year to date, but no change in the price. But presumably there's a reason why somebody was selling. There haven't been any sellers for quite a while now.
Well, in the meantime, we've had a host of companies holding AGMs last week, and I want to touch on just, the most recent developments unfolding with as many of these companies as we possibly can. Standard Chartered, we've heard that they'll be issuing a bonus shares. Investor reaction to that news, because this is set to have a dilutionary effect.
Yes, well, basically they won't be raising any money from the bonus shares, so it'll just be a simple dilution. The price has remained the same, but obviously it's going to have to be diluted on a 1-to-6 basis at whatever the price is on the record date. The price has basically stayed the same primarily because of the dividend which has been announced. So when the dividend record date lapses, presumably we'll sort of see an adjustment in the price.
Then still in the banking space, Zanaco announcing a new MD. Any detail on the man at the helm and whether succession planning has been in play to ensure continuity of company policy?
Yeah, Mr. Martin Scoutons from the Robobank Group, and he has quite some extensive experience in emerging markets. Basically, they plan to continue with their strategy. Probably the most significant development to come out of Zanaco is the partnering with the post office, and that increases the points of representation to 170 from about 50. So that's quite a big move for them, and they want to continue driving the retail segment and hopefully continue to be the people's bank.
So stacking up Standard Chartered against Zanaco, what would be your preferred bet at the moment?
Well, it's a bit tricky. Standard Chartered, like Barclays and the other blue banks as they're called, tends to take a huge chunk of the corporate business, whereas Zanaco has got quite a huge chunk of the retail business, more than half of it. And based on national trends, you'd expect that retail is going to grow faster. But it's also a lot more costly. So you've sort of seen Zanaco's capex, or we sort of expect Zanaco's capex to go up in the coming years. But the partnering with Zampos, for simple banking services is definitely something that's promising. And in terms of upside, we still think Zanaco might fare better.
Moving on to a different sector, we've got BP selling off its subsidiaries in various African territories, and Zambia is amongst them. Of course, a mandatory offer will be triggered here, and that is being expected. Any speculation as to what we're potentially looking at here?
Yeah, well, attending the AGM, the primary concern was, with what happened with Zain and the potential delisting, and sort of everybody was wondering whether that would be the same with BP. There hasn't been any firm indication. They just recently announced the completion of sale. So it will come down to how many of the institutions hold on to their shares and how many of the minorities hold on to their shares. It's about 25% free float and 15% of that's institution. So it will come down to perceptions, and unfortunately, one development, the withdrawal of the dividend at the AGM wasn't met fairly, and that might cause negative perception, but hopefully it won't result in a delisting. But ultimately it will come down to what the mandatory price is, and if the price is favorable, then we might see a sell out.